Welcome to my channel. I'm Dr. Romano. Today is March 26th. The last time I made a video on March 13th, and that video you need to also watch. It's called Stock Market Drop of April 2022. In that video and the previous videos, I talk about the ups and downs of the S&P 500 and how you could take advantage of those ups and downs. If you don't know who I am, I'm Dr. Romano and I call myself Dr. Hedge Fund on YouTube. You could subscribe to my channel. I will discuss in detail the market directions as well as how to take advantage of those market directions with the option market with very little money. So those of you who could be an advanced trader or you're just starting out, I want to be appealing to all of you. And this is why I try to use terminology that's very basic, because not everybody knows what a credit spread strategy is, or an option, or a put or a call. So in my last video, I mentioned when you should be entering the markets, okay? That is for a short strategy on the S&P 500. Now, we're talking about the options market. So if you don't know what an option is, I'll go over it again. But first, you would need to have a trading platform. And that type of platform, you want something very simple, very easy to use, and as well as has a great customer and support available. Now, what you need to do is you need to study what a credit spread strategy is. Okay, so basically that type of strategy allows you with very little money to short the S&P 500. You could do other indices, but after a while you realize which indice actually you make a lot of money on. Other indices, unfortunately, you don't make as much. So that's why I like the S&P 500. That's the SPX, that's the symbol. So whenever I talk about the S&P, whatever you want to call it, I'm talking about the SPX. And so when you're entering a position as a seller of puts, remember, that's how you enter it, and you close your position out as a buyer, you're buying those puts back. So as I mentioned in the last video, that you should have been looking for the S&P 500 to go up. And so after the third or fourth day of it going up, it's been going up. That's when you want to enter in for a put strategy, because the puts have very little value, meaning that you could buy a lot for very cheap. So you don't want to buy a put when the market's dropping, because you're going to pay a lot. So it was up to you to really determine that, but I did mention when you should have been doing that. So now it's the end of March, March 26th, and you'll notice based on the charts that the S&P has been going up, and that's exactly what it should be doing. So it tested its low before, so the previous video that I made, it was testing its low, and now this video, it's testing its high. But remember, now is the time to enter. Well, you should have entered it now, but if you haven't and you're just watching this video, you could enter it now and you will hold on to it until like the first week of April. Now, unfortunately, the way the calendar is set up, the beginning of the week is like, I think the 4th of April or the 5th of that Monday. And when that happens, you want to be closing your position at about that time. Now, you could go out 2 weeks with the expiration date or whatever it is you want, but as of now, you could probably do 2 weeks because we have plenty of time. Remember, you don't want to go too far out or too soon, because you need time to roll back your options when you have to use your risk management approach. But in this case, you won't need that. You just hold on to it, keep those positions going and live, and then when I tell you, which I've already told you, when to get out. Now, the stock market is like a rubber band, okay? When there's a lot of volatility that's happening, the rubber band is being pulled. So that time in April, that first week, the market's going to be pulled down and it's going to spring back up. So you need to get out of your positions when I've just told you, and make sure you get out when it's being pulled, not when it's being pulled back. So after, I would say probably the second week or third week of April, the markets will have gone up. So once it goes fully down for like 3 days, I would say it's going to be very volatile that first week. And that's when you want to be on the call side. So basically, the volatility, everything that I see in all the charts is telling me that's when it's going to drop. Now, I don't know how much it's going to drop, but I just know there's going to be a big problem there. And so that's why also interest rates are going to be increased. There's many other things that are going on in our economy. I'm realizing now that in my neighborhood, apartments that are selling for 400 grand, there's a $15,000 discount. It's all started. And I'm very happy to see that. I think and I believe that the top of the real estate market is here now. And increasing interest rates are only going to make that even more, because you have to qualify for a certain amount of mortgage, okay, based on your income and your credit. But if interest rates go up, that's a couple $100 more a month you're going to be paying. And so if you're already at the verge of not qualifying, then you're out of the market. You won't be able to buy real estate now. And so that's why the government's coming out and they're increasing interest rates to cool down the markets. And I believe, as well as the COVID real estate spike, I believe that's over. I'm starting to see travel decreasing, and in my business, it's already slowing down. I have another business besides the financial business part of it, and that business is now slowing down, and it's not typical to be this slow. So either people are afraid of the war, of what's going on, not sure. Oil prices are spiking, and so of course travel airplanes are affected heavily, because the people who run those airplane companies, they have to increase their prices to be profitable. And if oil prices have gone up in the past month, I think it was $1 something just in this past month, that affects everything. And so, and it also affects international travel, long flights, etc. So I think that the COVID rush is over now. And a lot of people say real estate permits are at an all-time high, but you have to remember that could be eliminated in 2 seconds. All we need is a first week in April market drop, the way it's going to drop, and then that will all get dissipated. It will evaporate. And that will affect the real estate commercial market on building. Because you remember how long it takes to actually build a house or development or an apartment building. It's between 3 to 5 years from the time that they start planning. And there's a lot that goes into it. So if a real estate developer gets a mortgage and the interest rates are already peaking, and real estate, the cost to build is peaking because of oil prices, remember, shipping is a big factor in the products that it takes to build a apartment building or office building or a house. People don't realize that. They just think that the real estate market's going to go up. I look at a number of indicators, not just the stock market, not just the volatility. It's like a roller coaster ride. And when you look at volatility over a 10-year period, you know something's going to happen right before it happens. Okay? Gold prices, commodity prices aren't normal. I know they spiked because of COVID, right before COVID, literally, I think 6 months before we knew that COVID was coming out, somebody knew about it, because our stock market doesn't lie to us. And if you know how to read the stock market, it's almost like the stock market is a bipolar person. Or like the city where I live now in Denver, the climate is a bipolar cycle. In one day, it could be gorgeous out, and in 2 seconds, it could be freezing out, or it could be hot and sunny, and then in the evening, it could have 8 inches of snow, or an ice storm, or whatever it is. People don't realize how beautiful the weather is in our city, but you know, it is bipolar, so if you are sick of it, don't worry about it because it's going to change. Well, that's just like the markets. The markets react to situations in such a way that you could actually predict what could happen. And if you have, let's say, a PhD in finance, or you're just really good at pattern recognition, you would probably do really well as a financial trader. But you have to have a long-term memory to be a really good financial trader. And so that's why I'm here to teach the public to improve people's trading strategies. Anybody could trade, but those successful ones have a certain quality. And that's something that, as you know, you develop over time, you'll realize if you have that quality. And so I hope that people will understand that if they have that quality or not. Remember, long-term memory, highly visual, and you have to literally remember your mistakes. And so being a real estate developer, you have to remember your mistakes, when to enter. Remember, it's 5 years from now if you start now building something. So 5 years from now, the markets are not going to be where it is. Unfortunately, in the upper, the mountains of Colorado, the resort villages, the real estate markets have increased so much that why would someone buy something now? Think about it. Why would someone buy something right now at the height of the market? I don't care how rich you are or how poor you are, but you shouldn't be doing that. You should be selling your real estate now and holding on to your cash. That's what you should be thinking about. And of course, when you look at the S&P charts, the S&P, for me, is like I could feel it, like the back of my hand. That's the way the stock market is. And that's how I feel the stock market. So when I told you in December of 2021 what to do in the stock market, well, look what happened to January. Didn't I tell you about that move? Or what about the move with Bitcoin? I had mentioned when Bitcoin was going to go up. Well, in August, September of 2021, I made a video. Did you watch it? Just take a look at all my videos and you could see my predictions. I'm not just, talking out of my what. I'm providing really good information. I'm not politically correct sometimes. And you have to understand that we are on YouTube. So I want to teach everyone, and I don't want to use terminology that is too sophisticated because the average person is not going to know that. What about if you're a 22-year-old and you want to learn how to trade? I don't want to scare you. So that's why I try to use very simple terminology. And so all of this, even if you have lots of money or you don't have lots of money, you can still trade and make money. Because our markets are so, I would say, expansive, meaning that today we don't just have 5 investment banks trading on the markets anymore, so to speak. Okay, I'm over exaggerating. Today we have trading platforms that anyone could trade with $5,000. Of course, if you have $5,000, you can't trade with all of it. You would only trade with $2,500. And so with the stock market collapse, I wouldn't call it a collapse because over 2022, there's going to be a number of drops in our market. It's just like the button, it's just going to be pulled, the plug. And that is going to happen because we have many global issues that are happening now. We have an unprecedented real estate market that's been escalating. We've had a pandemic. Just think about the volatility that creates. Now, companies like, let's say, I don't want to use names, but we'll talk about Walmart. When you go into Walmart, all the shelves packed. No, they're not. My supermarket, even Target, is not packed. Walmart, to get toilet paper, the toilet paper section is still very empty. Products, you see row after row of empty shelves here and there. Now, for a big retailer, think about how that impacts them. It really impacts them, because I know a manager of Walmart here in Colorado. And, I always ask really good questions. I asked him, how do you be successful at a manager at Walmart? And he told me at the gym, he says, well, you have to make sure that your store is fully stocked. Making sure that everything in the back is put out on the shelf immediately, so that when a customer walks into that store, they got their product. Is it happening? That's not happening now. There's a lot of empty stuff. And so it's just not Walmart, but it's a number of other companies that are having to reevaluate the cost of profits, the cost of making these goods. You have a lot of, I would say, shipping issues because of oil right now is spiking. It costed me $82 to fill up my Chevy Suburban LT for a half a tank. And I wanted to see exactly what it would cost with a half a tank. So I checked the mileage, I checked everything. It was $80. That's a lot of money. So that's $160 for a full tank. Now those are prices at Costco. So I got a Costco account to try to save on gas. Well, I'm saving 40 cents per gallon, but still it's not a lot of savings. So just think about the retailers, how they're gonna operate with such high shipping prices. For example, I had wanted to, I don't know if I should say this on YouTube, but I wanted to create a product, revitalize that product, and have it made in another country and sell it on, online. But when I realized the volatility that was going to happen, and this is before COVID, so I already knew what was going to happen. I could actually make a plot chart of the stock market and how it will react to the volatilities in our economy. And because of that, I didn't do that business. I had to do another business, which I saw beautiful possibility and the perfect timing. Of course, timing is an issue on everything. That's why I can't tell you, day to day, when to enter, when to exit this market, but I'm giving you a range. For example, April 4th, April 6th. That's a range because based on the calendar and when the government's going to come out, how the markets are going to, react to the different ups and downs of what happens, as well as the peaking of different charts in our stock market. There's a number of indicators that you could use. For example, gold, oil. It seems like everything's not making sense right now, honestly. And so that predicts the outcome, because you could go back in time and make a plot chart of what happened, and you could do this. I mean, you don't have to be a doctor of finance like myself to really do what I do. You just have to be someone that looks at a lot of detail. I know a lot of definition about finance because that's what you do at your undergrad and your master's degree and your PhD. I mean, your PhD is where you create your theories because you learned all the definition in your undergrad. And so you could improve your trading strategies by looking at your mistakes. And yeah, so that's today's argument. Now, I need you to send me questions to the live chat so that I can make future videos just for you. And also, please remember on LinkedIn, I've created a group called Dr. Hedge Fund on LinkedIn, and I'm also on YouTube as Dr. Hedge Fund. So I want to thank you so much. I'll be posting another video next week to discuss another issue that's coming about. So please remember to subscribe to my videos so you get my future videos. And of course, please remember to share it with your friends, at least 5 people. I want to thank you so much for watching. Have a great day.